All right, everyone. Thank you to everybody who's here today. Welcome to this webinar. Broker to Banker is the topic. My name is Brian Huddleston. I'm Vice President of Warehouse Lending for Fidelity Bank. With me, Chad Helmcamp. Chad, would you like to introduce yourself to the attendees?
Absolutely. Chad Helmcamp, President, Owner, Operator of BWC Lending, loan originator for 20 plus years. That's my story.
There you go. So, hey, before we begin, just a couple of items I want to point out about the webinar. As we're going through, we want it to be interactive. So, as things are popping up, you'll be able to post questions. The questions will appear on the screen, and we can either answer them as we're going along, or we can wait till we get to the end and pick them up then. But want you to definitely, if you hear something that sounds interesting to you, you want to expand on it, you want Chad to expand on something they said, please don't hesitate to post your question. So with that, I'll kick off. First question.
Let's do it.
A lead-in question. Chad, what prompted you to make the move from broker to banker?
Well, it's interesting because I honestly didn't really understand when I started my company that there was an option. Okay. And maybe that's because of who I was talking to and getting my advice from. It was sort of the very first person, not the very first person. I talked to multiple people about making this leap to go out on my own. But the person who sort of gave me the confidence to do it was Calvin Mann with Black Man Graham. So I called him up one day, asked him if I could meet with him. He said, "Are you free for lunch?" I said, "Yes." And we went to lunch that very day. We met for 2 or 3 hours. And I had been in the retail space for, all of my career at that point, about 15 years, 16 years. And I was tired of losing business. And as I did my homework and research, everything led me to starting my own thing. Multiple people asked me, "Why don't you do your own thing? Why don't you do your own thing?" And I had never really thought about it. But anyway, I met with him and he sort of gave me that confidence. And in hindsight, I realized I was always going to go non-del because that benefited him. And he wrote your name down on a piece of paper at that lunch, and we talked shortly thereafter. And that was always the plan, even though I didn't even know what it meant to be a non-delegated correspondent banker. So hindsight 2020, it was a great thing.
So is there a single aspect or a multitude of perceived advantages that prompted it? As I guess when you were thinking through it, what was the...
Yeah, I mean, honestly, I was really scared, right? Because people were like, "Oh, you're signing these agreements that you're personally liable and all these types of things." And so I was really nervous about it. And you had to have a certain amount of cash net worth and details like that. But again, I just sort of put my faith in the people that I was partnering with. And of course, Calvin had a very great reputation. I didn't know him personally up to that point, but his reputation was very, very strong, and I just trusted him. And so I said, okay, well, we're going to give it a go. Then when we started out broker, and when we got our approval with you guys, which took about a month or two to get everything set up, I was like, well, we probably won't even use the warehouse line. I'm like, why would I take on that risk? That's crazy. But hindsight 2020, I had no idea how much more scalable we would be. It just made it so much easier to control the process. And so once we realized that, and then of course, Haley, who's been with me for 10 years, was like, "Oh yeah, we're absolutely using the warehouse line." And we started using it. And you may recall, the timing was really good because rates were doing this. And so our production just went straight up, and we ran out of room on our warehouse line really quickly, and we needed an extension, and we just grew and grew from there. But I think really the scalability and that ability to control the process from start to finish, I didn't realize how important that would be.
Yeah. So when you started down the path to non-delegated correspondent, were there any characteristics within yourself that lent themselves to making the decision, or anything that you can pinpoint to say, "Hey, this was something about me that made it such that this is where I was headed"?
Yeah, I mean, I think that I've always been a hard worker. You can ask my wife; she'll tell you. I work really hard. I work a lot of hours, and so I don't quit. So I'll try anything. And so I really felt like I had the work ethic necessary. I also had the perfect team at the time. I really felt like my team wasn't too big and wasn't too small. I had a couple of young ladies that trusted me and believed in me and put their faith in me to take this leap and this chance. And I've said it before, could I have done it without them? I could have, but I wouldn't have been nearly as successful. It would have been much more challenging and I would have had to work that many more hours. So the team part of it was really critical. But as far as myself was concerned, I knew I had the work ethic. I've always been, I've never really struggled with confidence, although at the time I made the leap, I did because I was losing a lot of business. And I think that was the instrumental part of meeting with Calvin, because he's like, Chad, I work with a lot of people in this business. I know the people in the space that you're moving to, and you're going to do really, really well. And so I believed in him, I trusted him, and he was right. So thank you, Calvin, if you're watching this.
And thanks for the referral, Calvin. So you mentioned your staff, and a lot of times when I'm talking to a prospect who's a broker, they always say, oh, I'm too small. It doesn't make sense for me at the size that I'm at. Did you ever think to yourself, hey, we're just too small to do this. It doesn't make sense.
You know, I don't think I knew. I didn't really know what it was, right? My best year ever in the retail world was 33 million. My last year in 2018 was 28 million. That's how much I had funded at that time. And I just didn't know what to expect. Well, once I went out on my own, which the biggest reason was for pricing power and control, which I haven't had in years. And I knew what I wanted to set my margins at, where I wanted to be. And I did a lot of modeling and things to kind of figure out what my conversion might be, my pull through might be. And I just realized that I think this could be a big deal. Well, year one, we funded 47 million. Year two, we did 100 million. Thank you, COVID. Year two, we did 107 million. Thank you, COVID again. So those were really great numbers. I'm really proud of that third number at 107 million, because our split from purchase to refi that year was 75% purchase, 25% refi. So I am proud of that number. The first 100 million was a straight 50-50 split between purchase and refi. And then last year, of course, the market shifted and slowed down, and we did about 75 million last year.
Mm-hmm. And so do you think that, I mean, the warehouse line is one thing, but there's a lot of other parties involved in helping to make you successful, and what you can access, what a broker who's moving to the non-del can access, how important is the ability, or how much did you access those counterparties, like your law firm, outsource processing, accounting, that kind of thing, QC?
Well, and I think that's the thing, the world I came from, and the sales pitch was always, oh, we have in-house this, in-house that, in-house this. Well, now that I'm out on my own, I understand what in-house everything means. It means higher rates, higher margins, and lower conversion rates, and fewer closed loans. So that's what that means to me. So I outsource almost everything. Yes, I've got an in-house team of, there's 5 employees total in my company. 3 support people, 2 loan officers. So we're very, very lean, but I outsource processing on a contract basis. I obviously outsource my warehouse line and the banking relationship we have. My Blackman and Graham couldn't have done it without them, and they're a big part of my success. And so, yeah, I outsource almost everything that I can. And so, yes, I probably have spent a lot, probably on a la carte basis, it's more expensive, but guess what? I haven't had to lay anybody off, right? And so, yes, I mean, we lost a little money at the end of last year. January was a terrible month this year, but now we're back in the black and everything looks good. And I haven't had to lay anyone off, whereas industry-wide, you're hearing about layoffs everywhere. So I'm very focused on my numbers. I pay very close attention to my P&L and where I'm at. Because again, I want to be profitable, number one, and number two, I want to make sure I keep my team intact.
Right. So, ideally though, you could have, like in terms of processing, did you access an outsourced processor, or did you keep?
Yeah, and so when I made the switch, the processor that I had at the time did not feel comfortable going contract, and at the time that was really all I was comfortable with from an expense standpoint. And processors tend to be the more highly compensated people on teams. And so I will say we partnered at the time. I reached out to multiple investors. Stacy Johnson with Freedom at the time was somebody I really relied on, and she put me in touch with people. And Their big competitor at the time was United Wholesale Mortgage. And UWM does a great job of helping people transition, and they have lots of resources. And so they gave us this list of contract processors, and we started working through it. We definitely kissed a few frogs in that scenario. We quite a few speed bumps along the way.
Yeah.
But it took us a little bit, and we managed to land on a contract processor out of Fort Worth. And 4 years later, we're still working together. She's terrific, and she's not on my payroll, so I haven't had to let her go. She's made less because we're not closing as many deals, but our relationship is terrific, and she does a great job.
Yeah. So I guess we'll move to the topic on, and this is the topic that I think I get a lot of questions about this when I'm talking to prospects, and not disclosing everything you're doing in your business, but how do you see the ability to price loans as a non-delegated correspondent? And this is sort of a two-part question. I'll ask the next part about it.
Yeah. I mean, look, I don't think we went non-delegated correspondent pretty quickly. So we didn't do a ton of broker deals. But to this day, I still struggle with the lender paid, borrower paid situation. I tease people all the time about it. I get it, but having to make that choice and make that switch based on certain circumstances and scenarios, it just sort of annoyed me. Whereas non-delegated correspondent, you don't have to worry about that. You figure out what your margins are, and you can price it with no points. And if you need to buy the rate down, you pay points to buy the rate down to make the margin you need to make for whatever your business model looks like. So that control and the ease of not having to switch back and forth was great. Again, we get to disclose on our own disclosures. When we get to closing and we work with Blackman and Graham, they prepare, the CD. And so it's a little more seamless. You control it a little bit more. Whereas when you're brokering, you're switching from investor to investor, and you've got to go with whatever their process is for disclosing and closing and funding. And so our process is a little more, you can duplicate it a little better. And as I told you before, in this market that we're in now that shifted so much, we're doing a little more broker than we did before, just because of how competitive it is out there. But for the most part, the majority of my existence, we've been about 80 to 90% non-delegated correspondent. Right now, we're probably about 50-50. And my hope is once the market normalizes, we get back to being more, 80, 90% non-del.
Yeah. So you're saying in this market, this economic benefit is not as pronounced as it typically is in a normal market.
Yeah, right now, not so much, but I'd say before, absolutely. There's no doubt. I mean, it was, when we would get our what do you call the little reports y'all see?
The settlement statement.
Settlement statement. Thank you. Y'all call them a settlement statement. We'd get your settlement statements, and yeah, I mean, you would see the revenue that was being generated, and it was a game changer. So yeah, absolutely.
So in an environment like this, if someone is saying, is pricing the only benefit to making this change? Are there other benefits besides just what I would earn?
Well, I mean, for me, it's the benefit of just, this is my own deal, and I'm running my own business, and I'm running it like a real business, which I definitely wanted all along. So I never knew how rewarding it would be. And yeah, there's more stress that comes with it, especially when the market shifts like it has. But to me, I've made so many more relationships industry-wide. I mean, all the different people that are involved on this side of the fence, it's fun. I've built a lot of great relationships.
Yeah. And so in terms of, you were mentioning being able to control your processes. Does that translate to a better customer experience? And then in turn, the better customer experience, do you think that drives more referral business from people who say, oh, man, I had a great experience with Chad Helmcamp. If you want to do your next loan, I would go to Chad. Do you think that environment is set up for the non-del channel?
Absolutely. I can only speak from my experience. And my experience was when I was in the retail world, always told that, oh, you have more control, you have better processes, et cetera. Well, I can just say this: when we made the leap, my business doubled and tripled, and I've never closed loans faster or easier or smoother than I have in this space.
Yeah.
So that whole concept of not having control of underwriting was a total myth. I talked to an underwriter this week, and I rarely talk to underwriters just because I don't really need to. But my loans get to underwriting much faster than they ever did. I get approvals much faster than I ever did. And I don't stress. I don't stress about the loan for so long while we're waiting for the file to be perfect to get in front of the underwriter's eyes. So
Yeah,
that part's been a game changer for me.
yeah, for sure. You wanna-
Yeah, we got questions coming in. Let's see.
Yeah. Well, the last one that came in was, can you explain what the roles are for your 3 support staff?
Yeah, absolutely. So, and it's, certainly when we made this leap, I didn't know what I needed. So I'll point that out. So I have some people on my team that have their very traditional roles, and that would, Marissa on my team, who's been with me now 7-ish years, I think 6, 7 years, something like that. She's my detail person, my contract to close person. She locks loans, discloses loans, gets all the paperwork ready to go to our processor, who then submits the loan to underwriting. Loan comes out of underwriting, and Marissa's working with her directly to make sure that we're getting everything that we need and we get to closing on time. Then when we go to closing, Marissa's working with your team and Blackman and Graham to make sure the closing disclosure is correct. And so she's really the one that has the most client contact after we originate the loan. I've got a young lady by the name of Chris on my team, who I hired almost 2 years ago now. And I hired her to help me as more of like a loan officer assistant, helping me pre-approve loans, set up loan meetings, and collect all the documents up front. So she does all that on the front end. And now she's turned into kind of like a social media manager, which I didn't expect, but she pointed out that our social media wasn't very good and asked if she could work on it. And I said,
A lot of TikToks.
be my guest, be my guest. So if you don't follow us on BWC Lending, and you'll see me making a fool out of myself all the time. Thanks to her. And then Haley on my team, who's been with me more than 10 years, she's the one who I really never anticipated what her role would turn into. I mean, she's always been my sort of right hand, and I trust her and helping me build everything out. And when we made the decision to go out on our own, which was really around August, September of 2018 is when we made that decision. That's when I had lunch with Calvin Mann. Thanks to I forgot to mention Candy Lewis told me to call Calvin Mann. So thank you, Candy, for that. But that was when we made the decision to make the move. And then it took us about 3 to 4 months to put everything into place. And we took the leap January of 2019. Took us about 30 days to get our NMLS license because I did not submit anything until after I resigned. I didn't want to do that to my former boss, who I have great respect for. And so I resigned on January 2nd. Took us 30 days to get our NMLS license. We closed our first deal in February. You asked me yesterday, what was our first deal? Well, our first deal was broker, and we brokered it with Freedom, and we closed it in 21 days. For our first broker deal, I think that's pretty good since we didn't really know what we were doing. And we closed our first bank deal with you guys in April. Okay, so from January to April is about how long it took to fund our first. So that means we were probably approved with you guys sometime in late March, would be my guess.
I think so. Yeah.
So anyway, that was sort of the timetable. Did I answer the question?
I think so.
Okay.
Yeah. Yeah.
Oh, I was telling all the team. So Haley, I'll backtrack to Haley real quick, because she's really turned into almost like an ops person, and she does all my secondary stuff with you guys. So she's working on getting our loans bought off the warehouse line, all the accounting and all those things. So she does she wears a lot of different hats within my company.
Yeah. Yeah. Man, we had a few more come in. Do you want to?
Okay, let's see. What does Kelly say there? I think.
Kelly.
Yeah, underestimate the value importance of owning the process. Is there an example where having this control made all the difference to your borrower company? I mean, for me, I would say a lot of it is I track all my conversions, and when I was in the retail world before, my conversion rate was around 18 to 25%, 18% being the worst, 25% being really about as good as it ever was. Year one on my own, we were converting at about a 40% clip. So every person that called, so my conversion went up dramatically, almost doubled. And when your conversion doubles and your margins are set where you want them to be, guess what else doubles? Your income. So that was a game changer. Okay, Candy, going from retail to broker non-deal, were you concerned about the compliance piece? Oh, great question. Yeah, absolutely. That was probably my biggest fear. But I'll say this, thanks to the people like Fidelity who review things,
Yeah.
and thanks to Blackman and Graham, who is a trusted legal partner. And anytime I have questions, they've been terrific. Also, I mentioned before, UWM does a good job of giving resources. They gave us a compliance company who we work with to this day. They've been great for us. They file all of our quarterly reports within MLS. Call reports, thank you. Trying to think of the name of it. So they file all of our call reports. And so, yeah, I think, again, it's a delegated piece, it's delegated out or contracted out. And so it's not something that I have to have in-house. And I've always done business, I feel, the right way anyway. So I don't feel like I've got a lot of compliance concerns. But when I do, I have the resources I need to ask those questions.
All right.
Okay.
Let's see. So that was Candy. Carolyn Thomas. How did you manage your back office functions like accounting and financial management?
So glad you asked that. Because I'll say this, of all the decisions I made, I think one of the best decisions I made from day one was hiring a bookkeeper. Okay. And I happen to have a very good friend of mine who's an insurance agent. His best friend is a bookkeeper and had just started his own bookkeeping business. So I met with him. We had a conversation. I hired him from day one. He does my payroll, my bookkeeping, all of it. And so my financials are up to date all the time. If anything, they might get 3 weeks past due on occasion, but for the most part, it's always up to date. And that's been a game changer because I can get stuck in the weeds because although I don't love details, once I get into them, it's hard for me to get out of them.
Yeah.
And so not really knowing how to work QuickBooks and how to enter things is really important. And it keeps me freed up to do the things I need to do. So without a doubt, if you're thinking about making this transition, you got to hire a great bookkeeper and have a great CPA. My CPA actually also is a bookkeeper as well. So I've got a couple of resources I can lean on.
Yeah. Yeah. And so basically what you're saying is always keeping score, always knowing where you're at. If you're not making enough per loan in the non-Del channel, maybe it's time to reevaluate and say, well, is it time to flip to broker, which you've done a little bit.
Yeah.
So yeah, I mean, you always want to know where you're at.
Absolutely. I think, and admittedly, I mean, I don't get it right all the time. And last year I didn't shift fast enough. We were doing some analysis last year of deals we were losing because we were losing for the first time since having started our company. And that's just because of the hyper competitive market that we're in. And I didn't shift fast enough. And so that cost us money for sure. I don't know how much. I don't want to spend too much looking at that because it'll stress me out. But I did shift, and now we're seeing a real big difference. And so our conversions are starting to go back up, and we're not having to sacrifice margins to do it. And I think that's really important.
Yeah. Yeah. Well, and of course, as bankers, we want to see you you're keeping score as well.
Absolutely.
I know there's a few more questions coming in. I guess we can circle back.
Yeah,
we'll keep going down our list of topics. And just so for everyone who's aware, the way we're sort of handling this is we've broken it out into sections. If you saw the videos that we put out, they just follow the videos actually. So the next kind of topic we're going to cover here is just about research. And the question is, where did you start your research, or where did you conduct that research, and what expertise did you access? Did you just Google everything, or did you?
Well, Haley, I'll always tease, Haley's a big Googler. And so if you saw her Google history, you'd see there's no telling what she Googled. But I did have a decent network, but that network also connected me to other people. Stacy Johnson, Candy Lewis, connected with Calvin Mann, and you, Brian, with Fidelity. And then from there, I would ask all of those people, what investors should I be talking to? And now I think today we're probably signed up with about 8 to 10 different investors that we work with. And there's, usually 3 or 4 or 5 that you do most of your business with. And of course, I've got friends today that want me to get signed up as well. And it's one of those deals. I want to make sure I can give people business, right? I want to make sure that's the case. And you just want to make sure you're partnering with the right people. But Haley and I made that decision in August, September of that year. And we just started creating a checklist of everything we needed to do and to price out, who's going to be your credit company, Equifax, and I'm not Equifax, the work number, all the different, the LOS, right? The loan origination software. Yeah. I work out at Calyx Point, which Calyx Point, whatever you want to call it. That's what I work out of. And I was shocked that I would do that. But I would say if you're going to make this move, my biggest recommendation to you is don't overthink it. Keep it simple, KISS, right? Just keep it simple. And that's what I did. Every year I research new LOSs, and every year I stick with Calyx because it's substantially more cost effective. And it does all I needed to do. I can take my loan application, I can run credit, and I can run DU or LP, and I can disclose. And it's really all I need it for. So I've really tried to keep things simple, keep my costs down as best I can so that I can remain competitive.
Yeah. And I think, I still remember we had that meeting at this very table, and Haley came walking in with an accordion folder like that, and she had it basically paper clipped together that, these are the investors I've researched. This is, I mean, she had everything. It was really, really impressive. I guess in that research, just kind of circling back to, the people you network. I mean, how much did you really rely on them versus how much did you just rely on you and Haley doing Haley doing the research in Google?
Yeah, I mean, I think it's anytime I'd have a question, I would reach out to whether it be, Blackman and Graham or you guys. But Haley did a lot of it, and we would sit down and we would meet every week and see where we're at on the list. And I started creating the spreadsheet. Again, I had an idea. I did some pricing comparisons out there to see what the market looked like for different wholesale lenders. And I said, I feel like I can price here. I feel like my rates will be, an eighth to a quarter better than what I'm pricing today, which I felt would conversely increase my conversion. But most of the modeling I did based on the assumption that my conversion stayed the same. So, and from a cost perspective, we estimated a lot of costs, and I would usually bump them up by about 10% to give myself some cushion. And I'd say we were really good on all of that. There were a few areas we didn't estimate high enough, and then there were other areas where we way overestimated. So it sort of balanced itself out. Nowadays, I haven't even gone back to look, but I mean, every year the insurance costs keep going up. And so that's something that's just to keep an eye on, because you're like, wow, it does start to get expensive, and you do have to keep those things in mind.
Yep. Circling back to knowing your numbers, keeping
Yep.
the score.
Yep.
Yeah. So so I guess really for anything not in your network, how did you find that expertise? So you mentioned at the time Candy was an MI. You knew some of the investors, you knew us, you knew Calvin. Outside of that, how did you find the expertise outside of your network?
Yeah, I mean, I would say that's probably where at the time it was UWM had a lot of resources, and we would lean on the resources that they had, and and do a little Googling too, right? So it was a mixture of all of them. But yeah.
So we've talked about all this, how you sort of built the foundation to make the launch. Once you make the decision, you in your head, you mentally get there where you say, I'm ready to move. I'm ready to make this decision. Where do you start? Like, what is like the first thing you do? Like,
Yeah, well, I mean, I think that's the thing is you have all these conversations, right? You meet with Brian at Fidelity Bank and ask him, what does it mean to set up a warehouse line? What's it going to take for me to get a warehouse line? You may recall at the time that I wasn't cash rich because again, I was losing a lot of deals, so I wasn't making as much money as I need to. So I didn't have a lot of cash. So I took money out of retirement to fund my business. I had at the time I needed, I think it was around $100,000 in my business. So I took that $100,000 out of retirement, put it in the bank account, sent you an activity printout, said, I got 100,000. And then we went through the application process, right?
Yeah.
And in the first few months, it's a transition period. And I think I've mentioned this to you before. It takes you about 60 days to figure out what you're doing. Okay. Mm-hmm. Then it takes you about 6 months to get a real rhythm, right? Yeah. So 60 days to kind of know what you're doing, 6 months to know to really have a rhythm. And then after that, it builds. And so, of course, I don't like going negative. In the first few months, you're spending more than you're making because there is no revenue coming in. Mm-hmm. But then once the deals start to close and you start to see the balance pick up, and I've been able to grow the cash net worth of my business fairly well because of the way the business has grown the last several years. Yeah. Yeah. So, and I don't, and I'm sure people could debate about that. I mean, I've always wanted to have a really good cash balance in the business because I wanted to make sure that I was safe and secure. And especially in the last year, I've been really grateful that's the case because I now pay myself a salary and my salary is a totally livable wage for me. And if I'm hugely profitable, then I can take additional distributions. But so far, so good.
So you bring up a good point. I didn't actually have that in my questions. You take out a salary.
Yeah.
Would, if you were setting up a company to, again, let's say, yeah, for whatever reason, you're back at your old company and you're going through the thought process again. If you were setting up this company today, would you decide I'm gonna take a salary, or I'm just gonna live off distributions?
Well, I mean, I think starting out, I didn't pay myself. I paid myself a salary in the beginning just for payroll purposes, but I want to say it was like $24,000 a year.
Mm-hmm.
It was just enough for benefits, right? For my health insurance and stuff like that.
Yeah.
But once it grew and I knew my revenue, I knew what I was sustainable. I wanted to pay myself a specific salary. And now that's what I track off of based on whether or not we're profitable or not. And so like last year, even when I say we lost a little money at the end of the year, if I look at my salary, we didn't lose much at all, right? And I still made the money that I needed to make. And so I would absolutely say you have to pay yourself a salary.
Yep.
And you're an owner of a business when you do this. And I think you should be running it that way. And you should be paid for what you do. And I think a good livable salary is what the goal should be.
Yeah. Yeah.
So.
Well, that's
just my opinion.
Yeah. Yeah. Well, I mean, I can't say no disagree. I think it's what you asked me that very question.
Yeah.
Sitting at this table back in 2018, and I think I said I would probably opt for a salary just so you don't find yourself. I think a lot of times small mortgage companies will take distributions, and I've seen some tax situations arise out of that, which that's not a desirable position to find yourself in. But
I don't want any problems with the IRS.
No, we don't want you to. Looks like we've seen some questions sort of stacking up here. This is kind of really gotten down to the end of.
I think we need to acknowledge Kelly's comment.
Oh yes,
thanks, Kelly.
Thank you, Kelly. We well, we've answered that one, and so Sherry says, what is the penalty for not selling a file on your warehouse line? Oh, I'll handle that. Well, so the penalty, there's penalty interest, and then there's a dwell penalty. It usually happens after 30 days. So day 31 is when you'll see that happening. I think I'll just say on average, what we're seeing is a turn time, meaning the time that between a time a deal books and the time it sells, on average 9 days. That's across all clients in all markets, but we generally don't. That's not a thing that happens a lot, Chad.
Yeah, I'll follow that up and say, so 4.5 years in now, and I've had, I think, maybe 2 loans that have been on the line for more than 30 days. Mm-hmm. And they were on for maybe 35, 40.
Yeah.
And that was it. Just, you run into some challenges getting a loan bought, whatever the case may be. Knock on wood, have not had one that we couldn't sell. So that's been a big deal. Well, that's not totally true. Last year I had a couple of challenges with one investor. It was how we were set up in their system, which I still am a little questionable about, because it's an investor we've worked with since day one. And I couldn't figure out why there was an issue, but they wouldn't buy the loans. And so we ended up having to refinance the loans to get them off the line. On one of them, we didn't really lose anything. It was sort of a break even kind of a situation. The other one, we lost about $7,000-8,000. So it did hurt. But that was the first time that's happened. And there was a solution. Brian talked to me before that, a true worst case scenario is that's not an option, which means you got to go to a scratch and dent market. I've never had to do that. Don't really know what it looks like. Hope I don't have to. But again, I think my cash position is such that if it had to, it wouldn't put me out of business.
Yeah. Yeah. And I think that's, yeah. But would you say, I guess, sitting in the seat that you're sitting in, what would, building up a treasure or war chest for something like this happening, do you view that as an advantage, or would you rather sweep the cash back into your personal account? You know, I think everyone would rather do that.
Both. I'd much rather sweep it all into my
Sure.
personal account. But no, I mean, it gives me, I see my business as a living, breathing entity, and I want it to survive. And so, and a business can't survive without cash. So I'm very grateful and fortunate to have that and be in that position. And I hope it stays that way, right? So this year is not a year that I think many people are projecting big profits. And so my goal right now is obviously to be profitable. And if I can grow my cash position in the business this year, I'll see that as a huge advantage going into what hopefully will be a more normal market next year, but we'll see.
Yeah, yeah. Let's see, how did your first transaction go? I think you sort of answered that for us already. Let's see. What are some things you wish you hadn't done, or were there elements you missed in your planning rollout?
You know, that I think I've seen that. I think we talked a little about this question ahead of time, and I was asking Haley about this too. What are, if you want to say, what are some regrets, maybe, right?
Yeah, what are some regrets?
And Haley and I both said we really don't have a lot of regrets. If there is a regret, is that we didn't do it sooner, right? We really, really wish we had done it sooner, knowing what we know now. That's probably it. But I think we did a really, really good job of planning and preparing. So I can't say that there's anything specifically that we didn't do that we should have, or elements that we missed in the planning. Maybe if I talk about the insurance a little bit, I probably didn't really truly expect all the types of insurance that you're required to have. Maybe now that might be one, but
oh, that's right. We had this discussion years ago about cyber insurance.
Yeah, the cyber insurance has got real expensive. So that was the one that really has shot up the last couple of years for obvious reasons.
Right. So, all right. Next question. Did you go straight from retail to banker, or did you become a broker on your own that went banker? I ask because I'm a loan officer working retail, looking to go on my own as a banker.
Yeah. So again, I think because of the experts that I've talked to, it was a foregone conclusion that I was going to go banker because that's what they told me to do. And so I was trusting them and following that process. But absolutely, I was a broker first because it's easier to get that set up and get that all done right away. So I was broker right out the gate. I think, like I said, our license went live end of January, beginning of February. We closed our first broker loan in February. And then I think we had our approval with you guys by March, and we closed our first bank deal in April. And I want to say by May or June that year is when we sort of ran out of the warehouse line and had to increase it up already. So
that's right.
Good problem to have.
You called me at the TMBA conference. It said, Brian, I think we're at the top. I'm up to here.
And I never thought that would be the case, but we ran out of money real fast.
Yeah. And we were able to convene a committee meeting, and I think we had an increase amendment out to you that afternoon. So we could take care of that pretty quick. Let's see. Let's see. How do you determine which loans you slot to use your line, and which do you prefer to actually broker out?
That's actually a great question. In the beginning, I think I was real focused on that because, of course, you signed some real hefty agreements on those things. And I remember talking to Brian. That's one of the things I love about working with Brian and Fidelity is they look at the loans, and if they have an issue with the loan, which to date, if y'all had an issue with one, it was one maybe. They look at everything, and if they're concerned about a loan, they'll let you know. I'm fortunate that most of my business is pretty strong, and so with high credit scores and things like that, so I don't have a lot of difficult clients that I work with. And then the other part of it is FHA. I'm only broker on FHA, and so your tougher loans, which tend to be FHA, those are brokered anyway. So that sort of answers that question, I think, by and large. But I would say if I had a sort of a weaker conventional loan with maybe a 620 credit score with some challenges, I might decide to broker that loan. But I can't recall a time that I've done that. So just trying to think through it.
So yeah, you're really saying it's really kind of, market dependent, know your market.
And case by case, right? Like if you've got a lot of challenging clients, then that might be something that you look at a lot more frequently and go, you know what, I'm not comfortable with this being on my line. We're gonna broker it.
Yeah. All right.
I think I answered that earlier. Are we brokering a lot of loans? So all of my FHAs broker, VA and conventional, we can do either way, but I prefer to do correspondent. I'd say right now we're probably about 50-50 on broker on the conventional space, just because of the marketplace.
Yeah. Next question. What risk should someone consider when moving into this space?
Oh, wow. Thanks for the tough question, Rochelle. I appreciate that. There are risks, right? And but I think there's risks in anything that you do in life, and especially when you're starting a business, right? I mean, look, small businesses fail at a very high rate. That's not uncommon. But like I said, and if you've heard me, it's know your numbers and do everything you can to mitigate those risks. Partner with the right people, partner with the people that are going to protect you. So although a lot of my clientele is very price sensitive, as many of the people, watching today know, I have very price sensitive clients. I'm not all that price sensitive, meaning I'd much rather work with somebody I've got a very valuable relationship with that I know, like, and trust than going to the lowest cost provider. That's not the thing that interests me most. So anyway, surround yourself with the right people to mitigate those risks as best you can.
For the two loans that you had issues with last year, was it an internal issue, or was one of your outsourced processes?
It's a great question. It's one that I want to be a little bit careful about, just because it was more the investor I was working with. And again, we've been working with them for quite some time, but they sort of claim, basically, I'll tell you the issue that happened is it was a correspondent deal, which means we disclose the loan and we all the way through to the end, even with the CD, we control the LE and the CD. Okay. Well, the investor I was working with, we had sent out the CD, and the investor I was working with, in their system, they had it set up such that if anything changed on the LE, or in the fees, a new LE would automatically be disclosed, whether it was required or not. And so an LE was disclosed after we had sent out a CD. And I didn't learn about that until we went to sell the loan, and they found an LE and a CD in the closing package. So that was the issue. So it became an unsaleable loan, and then we had to refinance it. So I don't understand why their system was set up that way to this day. I don't really know why or how, because we had been operating that way in their system for several years. But it is what it is. And I just said, okay, whatever, I'm just going to move on down the line and solve this problem. And needless to say, we haven't sent that particular investor a whole lot of business since. So
There we go. Let's see. Next question. As you establish your new business partners, what are some covenants would you suggest we watch more closely to ensure positive, long-lasting relationships? Covenants.
Not 100% sure I understand that question.
I'm not sure either.
I'll tell you, like I said, when it comes to details, I can get into them, but I try not to spend a lot of time in them. I've probably signed a lot of things that I probably should read a little closer, just being candid. But again, that goes back to, when I sit down, like no different than sitting down with a borrower going through a loan package at closing, and the borrower an attorney wants to read everything and scratch stuff out. Most of it you can't change anyway. It sort of is what it is. So then it boils down to, do you trust the person you're doing business with? And I do. I trust the people I work with. Up until I don't, right? Up until like the investor I'm talking about, I trusted them right up until I lost confidence in the system. And therefore now I've got to rebuild that with them. And it's been a slow process.
Yeah. Okay, last question. Are you typically just doing forwards A paper? So
yeah, my business is predominantly A paper. my average loan size last year ticked up over 400,000. We're trending towards 450 now. So yeah, so I have very A paper type clientele. I haven't done a reverse mortgage in years. Wouldn't even begin to know how to do one today. So A paper, conventional FHA and VA, that's where we excel, and I stay in that lane. I don't do any non-QM and don't have any desire to go down that space.
Any reason why not you stay away from non-QM?
Because it's subprime, and I didn't do subprime when it existed, and so why would I do it today? Just because they call it non-QM, it bogs down my team, bogs down our time, and I think has a fairly low success rate. And I think I read last year that it was 4% of the market.
Mm-hmm.
I just don't want to spend a lot of time on such a small segment of the marketplace. And plus, once you do one, then you're going to get a whole bunch of them, and you're not going to go out and get the good business out there. So that's just my philosophy.
Yeah. Well, we got some more questions. Let's see. Do you think this market now is the right time to make the transition, and why?
Well, I mean, yes, because I think now is a good time. If you're in a position to do it, and again, I said my one regret was not having done it sooner. And we're at an elevated rate environment, which means in all likelihood, rates are going to get better moving forward. This isn't an overnight process. It takes planning. It takes time to put it all, to implement it and put it together. So yeah, I think the sooner you start to figure it out and can get to that 6-month mark where you have a rhythm, the better off you'll be. And so, again, it's May now. I made the decision August, September, and it took me about 4 months to get everything the way I wanted it, to launch it. So, but yeah, the sooner the better, as far as I'm concerned, if you're considering it.
Yeah. All right. Next question is, can you explain why the market now is more profitable to go broker versus delegated rates, non-delegated on loans?
Well, I think anybody who's in the market right now can witness the margin compression. Okay. And as I've said before, a lot of the investors I work with, they're good sized companies, and everybody's been right sizing and downsizing and laying off people. But you can only cut so much, and you still have to make money. Right. And so it's just become very, very hyper competitive. And we have worked with some different investors that have very, very competitive broker pricing. And so that has been one of the reasons there. But even still, on any given transaction, I can price, and I look at my non-del versus broker. And again, I think if I have a chance to go non-del, I'm going to go non-del. And there will be times I'll give up, 25, 30, 40 basis points to go non-del than to go broker. But it's really a case by case basis. So,
all right. That's that. And Sherry just circles back, says when you have a reverse, remember her. So,
well, Sherry, I need that actually. So make sure I need her information, because I get questions about it all the time. And the person I used to refer, I think retired like last year or the year before. So love to get connected with you, Sherry.
Well, we'll get you that info.
That's good.
Thanks for that, Sherry. Well, I think that wraps it up. We're at 50 minutes. If you made it all the way to this point, we thank you. And for more information, please reach out. Would love to talk if you're interested. Could maybe even get Chad to answer some of your questions if you like. So
absolutely. Yeah. If I can be a resource, please feel free to reach out. Like I said, Fidelity Bank and Blackman and Graham, those are the two partners I started to talk to the most. And I'm thankful to y'all. I mean, it's been a life-changing experience for me, and y'all and COVID, but
well, we don't want to be associated with COVID, but
hey, our industry benefited because of
COVID. That's true.
Now we're paying the price now a little bit, but that's okay.
That's right.
It's been a good run.
Well, again, thank you everybody for coming. Please feel free. We'll have information that we will send out after this webinar, where you can contact us and ask more questions. And if this inspired you to sign up for a warehouse line with Fidelity Bank, we would love to talk. So thank you, everyone, and we'll see you all soon.